Good morning and welcome to the M&A Forum. I'm Dan Meyer, publisher of BizTimes Milwaukee and BizTimes.com, and we do have a great program in store for you this morning. A program like this is made possible with the support of our partners. They include Bank Mutual, Schenck M&A Solutions, White Hirschbeck Dudek, and supporting sponsor Tech. As we all know, the M&A market is hot and very active, and by most, if not all accounts, it's a seller's market in many sectors. Our keynote presenter is Andy Greenberg, CEO of GF Data.
There's an explosion of data available on how public companies are valued, on significant M&A transactions in industries of interest to us, all sorts of industry intelligence and information on the capital markets.
Following Andy is a panel discussion comprised of professional advisors and business leaders who are in companies experienced in acquiring, growing, and merging with and selling other companies.
But as Andy spoke about before, what's really the sweet spot is if you have a company that's performing with over 10% revenue growth and over 10% EBITDA margins, and you've got a management team that will stay in place after the day of sale, you've got a hot company, you've got a hot commodity.
And I think when you just look at what's going on in this economy from a monetary policy standpoint, the money that's been pushed in to this economy is trying to find its way to higher risk assets, and it's funneling into private equity, and I think that's really pushing the valuations up. So that's, we're seeing it firsthand.
If you're a strategic and you're looking to pay up for a deal, access to a business that you might not otherwise have, a bolt-on company that's perfect for you, yeah, you got to pay a premium, but premium goods come at a premium price. So from the buy side perspective, if you're willing to pay up, there's a lot of access to great companies right now because the sellers are motivated to be there.
As it relates to, say, the euro or the pound sterling and the devaluation of that currency against the US dollar, when you see 20, 30, 40% devaluation, if you have any notion at all that these will equilibrate and get back to some sense of normalcy over time, it's a ripe opportunity to come in and pick off a target at a good number.
But the question to ask is, what happens if 2008 happens again 2 years from now and you still own your business? How are you going to feel? A good solution for that is, as we pitch people, of course, is a recap scenario where they sell part of the business and work with a firm like us, and grow their business beyond maybe what they could have achieved on their own and still achieve some of that diversity that they're looking for.
You probably should work with firms that have been through it multiple times and have a good track record of it. They're going to talk about early stage valuation, what you can expect out of the process, the list of due diligence that these guys are going to ask for, that's about this long. Those are things that people that haven't been through it don't anticipate, and they get bogged down. Steve said these guys rack up costs doing it. It just doesn't lead to a very efficient or effective process, and most times not a great outcome.
The program continues with 3 concurrent breakout sessions. The sessions are danger zones and pitfalls in a deal process from a monetary standpoint, and maximizing value in your business. I'd like to thank our M&A Forum partners, Bank Mutual, Schenck M&A Solutions, White Hirschbeck Dudek, and Tech. So thanks again for coming. We'll see you down at the sessions, and then have a great weekend. Take care.